I'm Deb Knight. Welcome to A Current Affair. $222,000 in just 13 minutes. That's how much Tim lost to an international scammer.
Sophisticated and relentless.
Apart from with close family and friends to mention it.
Think you can pick a scam message? Think again.
If you run a business with a bank account, you need to know about this right now. News clip. Business owner lost $180,000. What you just saw wasn't amateur hour. This was engineered to bypass every security measure your bank has. And it's happening to smart business owners every single day. Business email. Compromise, or BEC, isn't just another scam. It's the most sophisticated financial attack targeting businesses today. In 2023 alone, companies lost over $2.7 billion to these schemes. The average loss? $125,000 per incident. And that's just what gets reported. These aren't random attacks. They're methodically planned operations that target businesses of every size. The criminals behind them aren't sitting in basements wearing hoodies. They're organized professionals with technical skills and psychological insight. And they're getting better every day. Let me show you exactly how they're fooling business owners like you. First, they gain access to your email through phishing, malware, or purchased credentials from data breaches. Once inside, they don't immediately strike. They watch. They observe. For weeks or even months, they monitor communications between you and your vendors, noting payment terms, invoice formats, and communication styles. They study how your finance team talks, the acronyms you use, even when payments typically get processed. They're gathering intelligence to make their attack undetectable. One business owner told me, they knew things only someone inside our company would know. They referenced internal project codes that weren't public information. Timing is everything in these attacks. They wait for legitimate business situations, like when you're expecting an invoice from a regular supplier. Then they intercept that communication at the perfect moment. Maybe it's right before a holiday weekend when your team is rushing to clear payments, or during your busy season when everyone's attention is divided. The impersonation is flawless. The fraudulent emails contain the exact same signatures, logos, and formatting as legitimate messages. Even the writing style matches previous communications. Phone numbers look correct, but redirect to the scammer's lines. Websites are perfect duplicates except for one tiny change in the URL that's nearly impossible to notice. One victim reported, the fake invoice looked identical to the ones we'd received for 3 years. Same template, same payment terms, same everything, except the bank account number. The payment requests always create a sense of urgency. Our bank details have changed due to a system upgrade. Payment needed immediately to avoid production delays. Please keep this change confidential for security reasons. Each message is crafted to discourage verification through normal channels. But what happens after you send that payment? The brutal truth is something most cybersecurity experts won't tell you directly. Your money is gone, permanently. Once that wire transfer clears, the funds are immediately moved through multiple accounts across different countries. Within hours, the money is converted to cryptocurrency or withdrawn in cash. The FBI reports that less than 5% of these funds are ever recovered, even with immediate reporting. And your bank? They won't help you. In fact, they'll likely point out that you authorized the transaction. Business accounts don't have the same protections as personal accounts. Since you technically approved the payment, most banks consider this an authorized transaction, not fraud. One business owner shared, "My bank basically said I was out of luck because I initiated the transfer. My $97,000 mistake wasn't their problem." Commercial insurance policies often exclude social engineering fraud or provide minimal coverage unless you've purchased specific riders. Most businesses discover this coverage gap only after an incident. The impact on your business can be devastating. Beyond the immediate financial loss, you'll face cash flow problems that could impact payroll or inventory purchases. Your relationship with the actual vendor will be damaged when they don't receive their legitimate payment. There are also serious legal and tax complications. The IRS still expects taxes on payments you made, even if they went to criminals instead of vendors. You might face lawsuits from unpaid suppliers, and if the amount is significant, criminal investigations could temporarily freeze your remaining accounts while authorities investigate. So what red flags should you watch for? Pay attention to these warning signs. In emails, look for subtle address changes like extra letters or slightly different domains. Watch for sudden urgency in communications that previously had normal timelines. Be suspicious of unexpected requests to change payment methods. Communication patterns often shift during these scams. A vendor who typically calls suddenly prefers email-only contact. They refuse verification through established phone numbers. Or they insist on keeping payment changes confidential, even from other team members. Payment red flags include new bank account details for established vendors, requests to switch to wire transfers when you've always used ACH or checks, and amounts that don't precisely match your expected payments. Timing is another critical indicator. Be extra cautious about changes requested before weekends or holidays when your team has limited ability to verify. Watch for artificial deadlines that don't align with your normal business cycles. And be especially wary if multiple vendors request changes simultaneously. Now for the most important part, your bulletproof protection plan. Step 1. Verify every payment change through multiple channels. Never use contact information provided in the change request email. Instead, call your vendor using previously established phone numbers from your records. Require written confirmation on official company letterhead for any banking changes. Step 2. Implement dual authorization protocols. No single person should have complete authority to change vendor information and approve payments. Set dollar thresholds that trigger additional verification steps. Create a mandatory 24-hour waiting period for any payments to new account numbers. Step 3. Secure your email systems. Enable two-factor authentication on all business email accounts. Consider using encrypted email for financial communications. Regularly monitor for suspicious login attempts, especially from unusual locations or times. Step 4. Train your entire team. Every employee should understand how BEC scams work. Create clear written protocols for payment verification. Run practice scenarios with your accounting team to test your defenses. Step 5. Set up banking safeguards. Establish daily limits on wire transfers. Request callback verification from your bank for large transfers. Consider using positive pay services that match check information against your approved database before payment. Remember the golden rule. If money is moving to a new account, slow everything down and verify independently. That pause could save your business. This scam doesn't target stupid people. It targets busy people. The difference between keeping your business and losing everything is following these verification steps every single time. Hit subscribe if this helped you protect your business. Drop a comment about your worst vendor email scare and click the next video to see how they're targeting payroll systems now.